Hi, this is Craig with the Single Tree Team, brokered by eXp Realty. Today I wanted to talk to you about buying a home. You'll probably, if you've ever looked for a home before, you'll hear it one time, you'll have heard it 100 times, get pre-approved. Serious buyers are pre-approved. We need to know how much you can afford. We need to know what type of loan it is. We need to know if there are any concessions. We learn all of that when you get pre-approved. If you do not have a lender that you would like to contact, bank, whatever the case is, we have lenders that you can contact to get pre-approved with. Whether you have lower credit scores, whether you have higher credit scores, whether you're looking for a commercial loan, we have lenders that handle all of it. Typical things that we will hear is we want to wait until we find the right house. No, we can't do that because we need to know that you can essentially purchase a property. Without a pre-approval, we don't know that. Just because you want to doesn't mean that it's able to happen. Some people need to work with their credit a little bit to get things where they need to be. Some people say, hey, I'm paying $1,100 a month in rent, so I can afford a $1,100 mortgage payment. That's not how it works. Your pre-approval is going to be based off of your DTI, your debt to income ratio. So the bank is typically going to say they do not want your DTI higher than 50%, 50%, because they want to make sure that they're going to get their money back. There's factors involved that we need to consider when we're doing this. The people that say, I'm concerned about my credit, I don't want to get pre-approved, I don't want them to run my credit because, it could affect me getting a house. If you can't get a home today because of your credit score, you're not going to be able to get a home in 60 days when we find the right house to get the credit, to get to the pre-approval. It's just one of those scenarios. We need to know up front that you are a ready, willing, and able buyer. We have a commitment to the sellers, whether they're our client or not to bring looky-loos into their home. We need to be bringing in pre-qualified, ready, willing, and able buyers. Okay. Some sellers require a pre-approval just to schedule the showing. And offers that have pre-approvals attached are much more seriously looked at, much more seriously considered. We have a much better chance of getting the property under contract if we submit the pre-approval with it. Okay. Number 2, Zillow, Realtor.com, third-party websites, they're wrong. Pure and simple, they're wrong. When they tell you, hey, look at this house, it's $150,000 and the mortgage payment is going to be $700. That's wrong. They're not factoring in what your interest rate is. They're not factoring in property taxes. They're not factoring in homeowners insurance. So take that number with a grain of salt. They're basically saying for the average credit score, and the principal payment would be this much money. Insurance is going to depend on how your credit score is. It's going to depend on claims you've had, things of that nature. Credit score is going to depend on how well you pay your bills. So there's going to be a lot of variable factors in that scenario. Okay. Then once we kind of get through that process of getting you pre-approved, we're going to talk about what is important to you. How many bedrooms, how many bathrooms, square footage, basement, garage, if a fence is important, if a fireplace is important, stuff like that. When we're doing these searches, I'll have people that say, I only want to look at homes that have updated kitchens and bathrooms, or I only want to look at homes that have pure hardwood floors. Those are not things that we can search. We can look for, updated homes and things of that nature, but it's not going to be a 100% scenario. Okay. And then, when we talk to somebody and they say, okay, what can you afford? And they say, well, I'm pre-approved for $200,000, but I only want to pay $900 a month, and I only want to put 3.5% down. That doesn't exist. It's not out there. So we need to know, what your comfortable monthly payment would be. Then we can actually truly set up your search. So we know, okay, this is how much you're comfortable paying, this is your criteria, and we can get the ball rolling that way. You know, there may be a $50,000 difference between what you were approved for and your comfort level. That's okay. We're good with that. Just because the lender says, hey, you can afford a $500,000 house, doesn't mean you need to spend all that. Okay. Then we're going to start touring properties. Now, when we tour the properties, one thing you're going to notice if you're working with me is I'm not going to say a lot. I'm going to open the door. We're going to, I'm there to answer questions for you. We're going to look around. I'm going to be listening to what you are saying, either to me or to the person that you are looking at homes with. While you're looking around and you're, envisioning your furniture in this property, you're envisioning who gets what bedroom. You're kind of excited because this is a whole new experience for you, this next stage of your life type of a thing. I'm looking at the property for issues. I'm going to be looking for watermarks. I'm going to be looking for signs of termite damage. I'm going to be looking for leaks. I'm going to be looking for those types of things that you're not necessarily looking for because you're excited. And that way, I can at least show you, here's kind of what we're looking at. Here's some things that we have the home inspected. We're going to ask questions on it just to make sure that this issue has been addressed, that it didn't take care of the inside stuff, or whatever the case is. It's just one of those scenarios that I'm going to do my due diligence while you're looking to find the right home. Now, keep in mind, ultimately, none of this matters. Because when you find the right home, the home chooses you. You don't choose your home. So you walk in 10 feet, you haven't even looked at the bedrooms, you haven't looked at anything, and to say, this feels like home. Well, at that point in time, 90% of the time, the search is over. And then it's just a matter of getting the inspections completed and addressing the issues that come up with the inspection. Okay? When we do get the home under contract, or when we do find the home, and we will find the home, then we'll write an offer on the property. Now, when we write the offer on the property, we're going to do comps. So we're going to take a look at what similar homes in the area have sold for, and kind of base our pricing off of that. We're going to look at the comps. We're going to look at the condition of the home. Again, we're going to look at those scenarios. Do the light fixtures, the plumbing fixtures, the doorknobs match? Is the paint consistent throughout the home? Has the home been well maintained and taken care of? Is the floor in good condition? Is, all of that type of stuff. We're going to take a lot of things into consideration when we're writing this offer. And then we start negotiating. Then when we do get the property under contract, then you're going to get an email that says, here's the next steps. This is when your deadlines are. This is the inspections are due. Here's recommendations for your inspections or inspectors, those types of scenarios. Once we get the inspections completed, then we do inspection responses. Once again, we start negotiating. And it is just that, it's a negotiation. So I want the roof replaced. I want, the flooring, the carpeting replaced, or whatever the case is. Or we can do money off in lieu of repairs, or it might just be a straight up as is, and there's not a whole lot we can do about it. It is what it is. And we'll address those things as they come up. Okay. Now, while we're doing all of those things, the lender is going to be doing stuff behind the scenes to get your loan approved. But it's not going to be involving me in this equation. However, we do need you to work with the lender to get them the documents that they require, so we can get everything done in a timely manner, so we can hit all of our contract deadlines. Now, also the thing I want you to keep in mind is I want you to, in this time period, not do any impromptu purchases. Nothing more expensive than a pack of gum, because it can screw up the loan process. And obviously, you get where I'm going with this. But it's one of those situations where you have got to control your spending, or the lender is going to ask you for explanations as to why this was purchased or what this is. Absolutely no new credit lines. Don't go to Home Depot and buy appliances or whatever the case may be. Okay. Then once we get through all of that process, then we finally close. A lot of my lenders can close in as soon as 27 days. Not all of them can, but we will talk with the lender when we were writing the offer to find out how much time they need, depending on their backlog. Again, this is just a matter of trying to give you a little bit of insight as far as the buying process. I hope this is helpful. If you have any questions, let me know. Have a great day.